The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble and lovable host, David White. We've got some action in the markets finally getting out of this little trading range. Hopefully we close lower at the end of the day. But for now, it looks like we've got the first taste of the move lower. We've been looking for a close on Friday somewhere around 1,800 on the S&P cash. We're going to go through the reasons on that during the show today, along with a lot more and a better look at using options to trade equities and what options can tell us and the wisdom of crowds. We're probably not going to be running ads on it until the 1st of February, but we're going to be doing a special webinar on Tuesday. And that's going to be on February 11th. At least it's scheduled, penciled in for that date. We'll see how that develops, but looks like that. And we're going to be doing a white paper on just how these options work for predicting expiration and how I use them and why if you don't use some techniques that I am espousing, they are probably going to be way off. And if sometimes they tell you a lot, sometimes they don't tell you much, but there is patterns out there, and the patterns will tell you whether or not options are telling you something about expiration, or they're telling you little or nothing about expiration. But we're going to get into that today. We are off what is it? Just make sure I grab it here. Off 13 points on the S&P cash. We've got just a little over 2 billion shares. We tried to push up above that 1843 one more time. It looks like we failed. It will be very interesting to watch the close. Of course, we've got a lot of earnings coming out this week, mostly in the financial field. I suspect that we are priced for perfection in all of those, and probably going to see some guiding down. We already had some of that today, and we'll get into it in a bit. Today in history, in 1937, the first shipment of gold is received at Fort Knox Bullion Depository, the nation's official gold vault. Of course, just a few years earlier, they made it illegal for the common man to own gold. To force you into the paper that soon would be darn near worthless. But in 1937, finally collecting all that gold in one spot and giving a place for Western European countries to go hide their gold during the Second World War. In 2000, Federal Reserve Chairman Alan Greenspan, speaking to the Economic Club of New York, imagines an observer looking back in the year 2010 and saying, we might well conclude that a good deal of what is currently experienced was just one of the many euphoric speculative bubbles that have dotted human history. Market went up 2.5% on that. Sometimes you just can't tell people anything. And of course, he was the guy that always said that you could only see a bubble on the backside once that you'd been in it. But I believe elsewise.
Bubbles.
I just like playing that. I almost would play it again. Anyway, every day I'd like to start with history. I used to just do generic history. Now we're doing market history. Found a good source of it, and it's always on the slide here. JasonZewig.com, thisday.php. If you ever need any of these links, you can always email me at path@tfnn.com. That's PATH at tfnn.com. So you can email me a question if you have it. I'll try to get to and check my email at the bottom of the hour. In the meantime, you can always give me a call, or you can post a question in the den. But if you want to give me a call, it is 877-927-6648. So we're going to go through a little bit. I am short the market, both short in both my long-term and short-term newsletters, and doing pretty good out here. We're going to talk about those charts in a minute. Of course, today, Amgen, Charles Schwab's, and Wendy's. Tomorrow's Wells Fargo, J.P. Morgan, Bank of America on Wednesday, CSX, Fastenal, Kinder Morgan Energy. On Thursday, American Express, BBT, Citibank, Goldman Sachs, Intel, PPG, and United Health. And on expiration day, GE, Morgan Stanley, and SunTrust. Why GE always has to drop their big fat lug rear end on the Friday during expiration is always beyond me, but I suspect they'll be neutral. Morgan Stanley, SunTrust. The rest of these financials, I suspect, by looking at the charts, look awful much like they're priced for perfection, and I have a feeling that they mildly and tepidly probably pull back a little. It looks like most of these things are pretty much blown out, and some of them may be up, but I think overall, if we put all these together, we're looking at a small or slightly lower price, leading on next Friday to expiration somewhere around 1,800 points on the S&P cash. I expect we're going to have a small bounce out of that, maybe 10, 15 points, and that's going to set up the next big leg down in the marketplace as we move down lower in February. A lot of stocks moving heavily down today, and to see what I have here. I'll find it here. Did I not put that in here? I did not put that in here. Anyway, SodaStream came out this morning. I've been wanting to short this one. I avoided it because they always come out with a giant ad during the Super Bowl time, so it looked like one of the weakest stocks out there. I dislike it because of that ad coming out during the Super Bowl. They did come out and talk about lower expectations. SodaStream printing off $12 at the moment at $37.81. We've got a lot of other movers out here. I guess I'll go through them quickly. We'll try to hit their charts later. Jim Beam, BEAM, being bought out, up 24% at $83.25. Juniper Networks up 9.5% at $25.82. Merck up 6.62% at $53.18. FFIV up 5% at $93.03. Netflix up a great deal, up it was up a great deal higher, I think. Yeah. What do we have? 348 was the high today. Printing off at 342.58, up 3% today. ISRG off almost 6%. This is trading at 395.34. SNI 77.75 off 5%. Kohl's KSS off 5% at 54.08. Gap Stores off almost 4%, 38.31. Semantic SYMC off 3.8% at 22.58. So we've got some movers both up and to the downside. But I think we're looking at the first kind of a small pullback over the next week, and then probably a little bounce, and then probably getting ready for the next major wave back in what is a hugely overdue correction in the marketplace. And what can you say? Goldcorp announced it intends to commence to acquire Osco. I guess it's Osisco Mining, $2.6 billion in cash. Of course, that's Canadian money. It's not real. Just kidding, everybody from Canada. Don't get too upset. But we do have Goldcorp off about 1% on a day when the gold's up slightly. I guess everybody didn't take too bad to that news. So not a big deal at the moment anyway. So what else do we have going on? For the fourth quarter, Lululemon is also having huge issues here. They guided down. and we're off like $12 earlier. What were they off? $9, $9.85, trading out at 49.75. Certainly looks like the Fed is caught up to the Lulu. Of course, this stock and soda, both huge bumps by Kramer on CNBC. And if we get to it, I'm going to go into a little theory. May not make it there today, may even be later this week, but was doing a lot of reading and writing this week to get ready for that white paper and the webinar the 11th of February. And a lot of theories that lined up fairly well about too many people with too few sources of information, and one individual being able to drive a market. And interestingly enough, anyway, fourth quarter now anticipates that the net revenue for Lulu will be in a range of $513 million to $518 million. Based on same-source sales, and that's off about 25 million, and they're getting absolutely punished today. And I guess that the CEO won't be able to make a lot more comments about women being a few sizes too large for their pants anymore. He's long gone. Yelp, these guys were off, and it is at least partly because of an issue in the courts. What has happened was up in the Northeast somewhere, I forget exactly where it was, it was either carpet cleaner or dry cleaners, I think it was carpet cleaners, were getting slammed by Yelp reviews. He believed that it was his competition trying to drive him down and them up by spurious reviews, mostly because none of these people sounded like customers he had. So they sued. They pushed that there was no First Amendment right to privacy and anonymity if these people had never been a customer or were putting out false statements, i.e. creating libel. So Yelp was trying to defend this. They did lose, and it is going to be problematic. Yelp off about 5% at 77.82. If you could be sued at will for anything you say on Yelp, it might probably be a good thing. At the same time, you have to be very careful about what you say in the public if you slander or libel an individual or a business from now on. And I think it'll probably appeal this decision, but my guess is, from reading the basis of it, that it will probably stand long term. Anyway, we'll be back in just a few minutes. Make sure and give me a call at 877-927-6648 or email me at path@tfnn.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, we're going to look a little bit more at this market that is sliding away. Well, I'm going to have to get that, aren't I? Sliding away. Off 16 points on the S&P cash, 18.2632 as the last tick. And yeah, we're kind of sliding away on the S&P cash. And we're going to talk about why I believe that, and have been talking about it for a while. CHC Group is going public, they think, this week. Symbol will be HELI. Largest commercial helicopter operator for the offshore oil and gas industry plans to try to raise $500 million by offering almost 30 million shares at $16 to $18. Cypress Energy Partners is another one of these limited partner deals. Avoid it. CELP. I don't know why I can't read today. EP Energy, EPE, another one. Avoid it. And another one. RSP Permian. Yeah, another E&P operating in the West Texas Permian Basin. So lot 3 out of 4 of these things are these trusts for energy, and with declining prices, not probably a bad time to get out of Dodge for these companies, but I certainly wouldn't want to be holding stocks of this new IPO, of any of those. We were talking about IPOs or not IPOs, we're about talking about options and what they can tell people about. And let me get to what some of the questions have been in my email. And one of them was sometimes I actually say there is a highly likelihood, 90% likelihood that the S&P is going to close at this price, or Apple, or IBM, or a specific stock. And there is a fairly easy way to figure that out, and that is if there are enough options, if there's a significant sample, the options will pretty much be a great vote of where the stock should expire. We do know, depending on whose study you want to look at, anywhere from 80 to 85% of all options go, on average, unexercised by the end of the month, by the time they expire. So if you would just look at the majority of those, or the most money would be lost in those options, and plot them out, you would find out. Now, there had been an original idea on how to do this on a site that was called Max Payne. But it would kind of work and it wouldn't work sometimes. And I'm going to tell you why it works and doesn't work sometimes. One of the first reasons is that there aren't enough options, i.e., there weren't enough bets placed to get a good idea where they're going to expire. Sometimes those bets can be all spread out, so a lot of money, but no real definitive vote of where they can be. So sometimes enough money, but just meaningless. The curve for where those are saying where they're going to expire, pretty worthless. Sometimes there's what I like to call the V, which is a pattern that I'm showing on Tiger TV and in the den right now. And that is basically almost a giant pointer right to the price where something should expire. I'm looking at the chart now for AEP, American Power. I think it's American Power. $46 is a highly likelihood. That's where this is going to expire on Friday at the close. And there's probably a 90% chance that it does close at $46. And there's a variety of ways and options. You could continue selling as short and buying the calls. You could do a variety of methods of trying to make money off of one of these. But one of the things I did want to show was a positive, which is these things can not be huge movers, but can give you a good idea that, one, you would probably not want to go long or short to spend a week hoping to get a buck lower on a chart or on a stock, especially if earnings are coming out at the end of this month. To see if I can get my pointer here. And I actually put the little V in here. Hopefully everybody is watching. But if you just add up all the money that's going to be won on calls and won on puts, as you look at these, if you get this real kind of V pattern, almost like a pointer down to the low, you'll see that a lot of times these stocks will go right to that point. Be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Slip sliding away. And we are slip sliding away on the S&P cash. What are we off? 16 points. Is that right? 16? What is it? 16.75 points. So 16 and 3/4, 16.88 now, 18 and 25, 47. And what do we need to do to confirm probably a top end, and that is a close below 1833. And I think we've got every indication that that's what we're going to get. Volume is low at the moment, 2.25. So it really hasn't come in. And normally you don't get huge volume off a top like this. The market does not turn all in one big movement. But as I said, I think we pull back to 1800. We probably get some kind of rally attempt, maybe up to 1820, 18, maybe up to where we're at now. And a lot of times people call that pattern a fish hook because that's what it looks like. Straight down, kind of turn back up, get about halfway, back up, do a 50% retracement, and then get that little barb move off the top of it. And that's where a lot of time volume will pick up in the markets. We're talking about using options to trade equities. So what can we do, and why does it work? Actually, the why it works goes back to 1906, and we'll get into that yet another day. But it's been known for a long time that if you get enough people that aren't all listening to the same radio show, aren't all going on. They didn't all go to the same college. They aren't all from New York. That they're diversified, and there's enough of that diversity that usually the average of the mean of that of their guesses, if there's actually something to win or lose, will actually be right. We've talked about this before. They found a submarine in the middle of the Atlantic by asking people to place bets on where they thought it was. The Navy thought that it was a harebrained scheme, and they proceeded to go out and look for the submarine for 5 months before giving up and listening to the scientists who said, here's where it is. And they found it within about 200 yards of exactly where the scientists had other scientists from all walks of scientific discovery place bets by giving them all the available information. And some people were a mile off, 2 miles off. But when you averaged them all up, 220 yards from exactly where he said it would be in a vast, vast ocean. So when we look at this, we're going back to a chart here that I'm showing, and that is American Power calls and puts. One of the things that you're going to see is it's almost like magic, especially when you have a nice pattern that looks somewhat like a V, these puts and calls will go pretty much to where the highest volume is, or at least where the most amount of money is going to be lost. Most of the time, these two things are the same, and when they are, highly predictive. And if we look at the top chart, it shows 2,800 calls at the $46 range. We have it basically 3,500 calls at the $47 range. When we look at the puts, 1,700 at 46 and 1,000 at 47. But still, these are the big movers out here. When we come to Friday, there is about a 90% chance that this stock will probably be plus or minus 20 cents at $46. And you say, Dave, how can you do that? Well, there is a school of applied statistics. And there is what's known as a distribution model that follows closely with baseball on how you figure these out. And we're going to show you a few things. One of the big problems originally with the Max Payne way of looking at expiration was this. We're looking at just the raw data and weren't looking at the pattern that raw data actually generated. Oh, I've got a caller. Bing, bing, bing. If I could, I was actually lost in thought trying to find a pointer out here and found it. Anyway, we're going to go to Danny in Atlanta. How you doing today, Danny?
I'm doing better. I've had that killer flu for about a week. It's no fun.
Yep, I had it for about 6 weeks last year, and I'm glad that this year I did not get it. Anyway, what would you like to do today?
Can you look at the GLD options and see if you can discern anything from that?
Yes. Hang on just a second. I've got just about everything. Come on. Why is everything? Okay. GLD. Give it just a second here. It's not incredibly fast, but it is very good. So we'll take a quick look at these. Okay. GLD actually is showing us slightly higher. I'm going to zoom in on this. Are you watching on Tiger TV or in the den?
Yes.
Yep. The bias is to the upside. Probably a little bit hot out here because of a lot of the shorts in the marketplace, but showing about 133, 134, something like that. That will be the bias. That doesn't mean that goes and actually hits that price. Just that the bias will be up. And I was going to get in. I'm going to get into it a little bit later. But if you notice the January pull calls and puts, their curves make more of an X than a V formation in this chart.
Uh-huh.
Okay, that more is a bias than pointing at an exact price, and I'm going to get into that a little bit. But normally, when you have something that looks like almost like a V straight down to a pointer, like we saw in the AEP chart, this one is more of a bias. It doesn't give you an exact. It gives you the idea, though, that we're probably at the very low end at 120, 121. On GLD at the moment, but the bias is certainly up at least for the next 5 closes in this marketplace. So I can't see any reason why you would want to get out of them this week. I am looking for a major pullback in gold and maybe a little washout, but I don't think you're going to get it this week.
Okay, great.
So, yeah, I'd sit on my hands. This thing, certainly if the markets, wheels fall off the markets, maybe you get it. But it's going to be, certainly if you are not, do you have puts or calls on this?
No, I'm just looking for a general indication in the gold market.
Yeah, if you got the ETF on this or you're sitting on futures, I can't see that you've got a lot of downside risk for the next 4 or 5 days. And even into next month, if you notice, though, into next month, you probably can't see it because it is so small. Let me try to you still can't see it, but actually the February's show 120. So the bias into next month is back down. So I'm kind of thinking that what we're looking at is kind of a bounce into this week, probably going to get a pullback back down a little bit lower, whatever it closes on a Friday. And then back in there, we're probably going to find the good sweet spot, probably buy gold yet again. So I would say probably going to see a little weakness after the end of this week. Okay.
Thank you, Dave.
You bet. And we were looking at that. So I wanted to go back to some of the things we are looking at. Anyway, one of the things that can make the go away and not be very predictive is super high percentage of the float or many days to cover. You'll see it quoted both ways. But, if you've got about 4 or 5 days to cover, if you've got more than 10% of the float out there shorted, that can certainly start really messing with these. It's easier to run shorts than it is to push options around, kind of like all the rules of physics between gravity and all the other forces of physics out there. Which one's the stronger one? Magnetism, gravity, and normally, gravity is fairly weak. Magnetism's a stronger force, but generally less of it. But when you put a lot of stuff together, gravity certainly has a huge deal. And short interest trumps options for the most part. So you always want to be knowing when you're looking at the chart how much short positions, how big the short positions are out there. One of the things that we were looking at, like I said, is if these things make an X or if they're kind of bent a little bit, they can give you an indication as to where it's going, but not a price. They can give you a bias for the week. And we're looking at the ones for Shield. I was actually trying to short this last week and couldn't get any shares to short. Probably good indication that this thing was either going to take off one way or the other after earnings. I could have taken the actual. Couldn't get the equity short. Probably could have taken options. I didn't like the price of them though. And of course, this was showing a great deal of indication that this thing was going to go out at about 54. But when you see these big flat lines like this, more of a U shape, let me put it that, than a V shape, that gives you a good indication of where these things are at. My guess is that they're going to, if the market recovers even a little bit, this thing's probably going to try to pin it, or at least option market makers are going to try to push this to 40 by Friday. Okay, now here's the X pattern. Again, this is more just like someone took a big magic marker and hit it with an X. Again, less predictive than a giant pointer or a V pattern. And we're going to talk about variations of this X pattern. But when you look at the X for Netflix, this thing would have you down about 290. But again, huge short interest. This thing had a nice pop today. The bias will be down through this expiration, but even today, I didn't look at it in the last few minutes, was up fairly strongly. And 338 is the last tick I have that I show on this. But we were talking about actually seeing this bounce on Friday. I said we needed a fairly decent bounce. If this thing would have bounced about another $5, I would have pulled the trigger on it today. Got to 348.67. My guess is this thing's probably still headed down. The bias will still be down, but you needed a bounce to get into it. I was probably a little greedy and thinking that I'd get 355 out of this thing, or 358. But that was your opportunity probably to grab the next short side of this. It does have a huge short interest in this thing. So when you look at these charts, even though they show a huge move down, if you've got a 10% or 15 or 20% short interest on this, which is, what is this right now? It's 2.6, or was 2.6 days to cover. I forget what the percentage was. I think it was 8 or 9%, so it was fairly high on that range for that. In fact, short interest comes out twice a month, and they just came out over this weekend, so you were going to get the first update for those this weekend, and actually I was going through those to look at them. Now here's the pattern that I like the best and seems to be very good, especially with more expensive stocks. I call it the goblet. There's kind of a wind base to the bottom of them. And the reason is that no matter what happens, come Friday, there's going to be about $18 million in IBM calls and puts that are worth, well, basically that. They're going to, at the minimum, they're going to be worth about $18 million, $19 million, something like that. And that's going to be at 187 on IBM. Now, maybe they'll be a little bit higher or lower, and maybe you're going to see this track into 185 by Friday. That is not something that's not something that you are immune from. These option prediction points will change day by day depending on what people do. And again, there's probably a fairly good indication that this is probably going to be more on the 185, 186 by Friday. But you're going to watch this each day, and I'm going to keep track of it. But I bet you're going to watch this thing slowly move to 185. What it can tell you, though, is that you shouldn't expect some huge move to the upside by Friday in IBM. A pretty good indication this thing's going to expire fairly close to this range. And let me get a current quote on IBM because I didn't look at it before. Do I have another? No. I've got my collar. Okay. 184.30. So down 1.5%. So pretty good indication, I bet, when we check these. Maybe I can check them right now, actually. Let's see. We'll come back after the break. And I'll have that for you. But I bet we see these charts line up for about 185 on IBM for Friday if the wheels don't fall off this market. We'll be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We had a couple of questions. I wanted to get to just a few of them. I got an email, a couple of emails. I'm going to try to answer those in the last few minutes. Anyway, wanted to get to this pattern that I call the goblet, and that is a nice curve up and down in the options. I kind of look at it as goblet formation. The reason I do is there's almost kind of a wine stem at the bottom. When we get to Friday in Apple, there's going to be at least $900 million in options that are going to be exercised and made money on. But what are they pointing out? Probably pretty close to a $520 expiration for Friday, maybe down as low as $515. And we're going to see these move around a little bit. They do tend to track in to the end of the week. Now, another question I had in the den was, and there are a couple other patterns that I'll try to get to tomorrow, but I think these are going to show off just what you can do with them this week. So I want to kind of concentrate at least somewhat on that. I had a question about where I thought the S&P would expire on Friday. Well, the S&P doesn't have options on it per se. The SPYs do, and it really looks to me like we're probably going to get pushed down to about 1,800 on the S&P cash. Now, it shows just a little higher out there, but I almost guarantee if I go back and look at the options, there's going to be a ton that expire both put and calls right at the 180 mark. And that's going to gravitate this thing back in on Friday to probably right about 180 on the S&P cash, minus some kind of giant earnings, either disaster or surprise in the marketplace. Looks like this is a fairly good bet. And why, since last Wednesday, I've been saying I thought this market was going to expire somewhere around 1,800 on the S&P cash. There just isn't a whole great deal out here to suggest anything else. Even next month's are only up to 181 on the SPYs. Now, normally I would add a little bit because markets have a decent short interest in these markets. But one thing we had was almost all the shorts get out of the market in the last few weeks of December. We came back and there was some mild shorting. But when I've looked at all the latest data available this last weekend or this weekend on just how many stocks are short, there's a few of them that had some massive interest in shorts, but for the most part, everything's down to 1 or 2 days to cover. There just isn't a huge short interest out there, and makes me think that there's probably not a lot of bias to be added to these larger markets with huge short interest. And I think that's why we're seeing a lot of these stocks move today. Now, one of the stocks I do have and did make a play on in the daily newsletter, The Path of Least Resistance, was Cree. Cree is off today. It's down at just over $61 now. And of course, one of the reasons I like this one was that why the indication again looks more like a hockey stick than it looks more than a smile or a goblet formation. There was a pretty good indication that at 66 or 67 where we went short, that this was a good pattern that would have bias all the way through expiration to the downside. Now, am I going to get 50 on this? My guess is that we're going to see a lot of these options washed out today, and this thing's going to start creeping up over the next couple of days. And, will I get sub 60s? I may get down to 58, and then we're going to see this thing probably wander back up to 60 on Friday. But we'll watch this and we'll track this trade because I do have this on in the path of least resistance. So we'll follow it this week. Anyway, you have a great and safe day. Remember, sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.